Hello and good morning. I welcome you to the morning meeting today on Wednesday, the 28th of February 2018. This is Jens Klatt speaking, exclusively presenting this format to you here for JFD Brokers. So we want to have a look at the markets, how things are going after a semi-annual testimony from Jay Powell in front of the U.S. Congress yesterday. And in fact, over the last semi-annual testimonials from Janet Yellen, the ones I remember, they were quite uninteresting, unspectacular, and not much new was communicated, even though Powell, somehow mentioned between the lines that there's a good chance that there will be 4 rate hikes of the Fed in 2018. At least market participants interpreted his words in that way, and the reaction was quite obvious. Equity markets are very, let's call it, yield sensitive. Here in the afternoon, in the DAX, there was some serious pressure, and the DAX lost some ground. In the morning, pushed below 13,400 points here, and followed the U.S. equity markets, which were also trading lower. Looking at the S&P, for example, came in quite weak here, as you can see. Not just came in weak, but traded lower throughout the whole trading day yesterday. And on top of that, gold reacted quite bearish, so dropped below 1,330 USD per ounce. That's also something which is working a little against me, let's say, because I was quite optimistic for gold here, and short-term attack to the region around the yearly highs around 1,360, 365. Even though I have to say that currently it seems as if the gold price can stabilize here, and as long as we are not dropping below 1,300 USD, I think there's a good chance that here that gold will see a test at least of this region rather sooner than later. Let's see, because the thing is, I'm still quite bearish for the US dollar. The US dollar reacted in a bullish way yesterday. And not just that, but gold reacted in the way you expect gold to react once yields spike higher, and there are 4 rate hikes mentioned, at least between the lines. Even though we have to say that most of this is already priced in. And when looking at the Fed Watch Tool, for example, you may remember the times when I said that the market is at least expecting 3 hikes in 2018, and there's a chance. If in the Fed Watch Tool, you probably remember that I said, well, it's 25%, as you can see here in this tool then at the Chicago Mercantile Exchange. So all in all, the bullish impulse yesterday probably is short-lived, let's say, and there's a good chance that this push will rather sooner than later be sold again, meaning dollar could lose here against this current region around the February highs and push lower again back below 90, while gold probably sees another push higher then. And if you combine this, well, then I think it's also not so unlikely, let's say, that probably equity markets can find some support, at least today, into the monthly close. I'm not sure about the upcoming days, to be honest. The first thing I consider to be positive is that right now European equity markets see demand over European trading hours. That hasn't been the case over the last days, starting from last week onwards, minimum, by the way. And that's already a quite positive sign. So I consider this reaction here, even though we saw some pressure, selling pressure in the morning, but I see this reaction to be quite good. And now the question is, can the DAX make it at least back above 12,500 points? If so, then there's further room, probably up towards 12,540, 550 points. Nevertheless, depending on what the US equity markets deliver. And here, the thing is that so far it's not yet a done deal. The Dow Jones here can really find the support against this region. Could probably be that we're seeing another test of the region around 25,000 points, which would then go hand in hand, obviously, with the DAX potentially dropping here towards and probably back below 12,400 points, and if we see such a push lower here, then DAX could also go as low as 12,280 to 300 points. I will show you a chart in a few seconds here. Even though, have a look here at this region. That was the first high the market found after this crash at the beginning of the month. So this region, if you look at it from a short-term perspective, and the Dow Jones, similar is true for the S&P, by the way, this region can be seen as kind of a long trigger around 25,400 points around here. So it's really interesting to see whether there will be demand coming into the market then in US equity trading at or from 2:30 p.m. GMT. If this really happens, that could also give the DAX a little lift here, and at least make it possible that the DAX will end the month above 12,500 points here. And by the way, the same is true for the S&P too. So what you can see here is, if we go to the hourly chart, it's also quite obvious that here the market is testing a region which could potentially act as kind of a long trigger. So the market has somehow built a double bottom here, made it back above this high, potential relative high here. Now seen a dip lower, making new highs over the last days of trading, and then retesting this potential breakout level here. So based on that, if you look at the hourly chart, you can see that the market has broken this sequence of falling highs and falling lows, and has somehow recovered most of the losses here, respectively the bearish bias which has developed here from the beginning of the month. And probably if we're making it higher from here and push above this red line, which is showing the highs from yesterday, probably then we have a very good chance to see quite green close of the trading month, even though we have to say this is 2% move from here. Current levels we are trading at is 2,740 points, and we're talking about 40 to 50 points on the upside. Not sure whether such a demand after the comments yesterday and the interpretation from market participants can really come into the market. Nevertheless, it's not impossible, let's say, and this again could lift the DAX higher. I consider, by the way, the DAX to be positive, at least neutral with a positive stance here. Once we're trading above, or as long as we trade above 12,280, 12,300 points, and that's it. So it's definitely neutral. There is slight bullishness, even though we definitely need the support from the US equity markets, even though I have to say I consider the current price action with demand coming in against 12,400 points during European trading hours already a positive sign. So it's definitely something bulls can be, well, at least short-term proud of, let's say. Yeah, and so that's it around the DAX. Let's have a look here at the Euro. The Euro USD, also very interesting. We've seen obviously US dollar demand coming into the markets with the comments around potentially 4 rate hikes in 2018 from Powell yesterday, and the market now attacked the region around the February lows. But now something interesting is happening. We have the last trading day of the month. Usually we see kind of a repatriation here, and some interesting capital flows, which sometimes result in quite unexpected moves. And I know a saying which says try to avoid selling new lows into the monthly close, respectively try to avoid buying new highs into the monthly close. And we've seen this attack and slight push below that level. The question now is this potentially a fake out on the downside? Again, if I combine my picture I've drawn around the US dollar and the market already expecting 3 hikes minimum and a 4th rate hike with 25% probability, and now combining it with the comments from Jay Powell, combining it with the fact that the market reacted US dollar bullish to these comments, to me it somehow looks as if we are somehow probably seeing too much hawkishness and potential for the US dollar based on these comments, which means I favor, in fact, the fake out here below these lows and consider the current attack in the Euro USD at these lows to be more like a fake out. In fact, currently looks like that. Not yet safe, but the moment we push above 122.40, 125.50, at 122.50. I think we can definitely start to think about this as a short-term attack and a potential fake out, even though the potential on the upside is not huge, let's say. So I consider region around 22.80, 23 already a quite strong resist on the upside. It's still the fact, or it's still the case, that we need to make it above 123.50 to have further room up to 125.50 here on the upside. So if we combine, or if we sum this up, that means nothing more than I'm quite optimistic for the Euro USD here currently. Considering this a potential fake out, nevertheless, new intraday highs right now are crucial, and then on a higher time frame, we definitely need to make it above 120.24 here. I'm sorry, 23.50 to have further potential up to 25.50 on the upside. Yeah, so that's it on the Euro USD. Let's have a look here at gold, and probably let's go down to the hourly chart. One sec. Okay. So gold, after seeing potentially a long trigger here around 1,330 USD per ounce, has now, based on these hawkish comments from Powell, dropped more aggressively on the downside, made new weekly lows. No, I'm sorry, not new weekly lows. That was the low from last week here. Even though that picture does not look that promising anymore. But again, even if we are now probably, it takes some time until we see potential or further potential and momentum on the upside, I'm still quite optimistic for gold in general, and the short-term attack of the region around 360, 365, so the region around the yearly highs here on the upside. Since, again, I see most of this already priced in what was said yesterday, and I think the reaction itself is difficult to see as a sustainable move. I consider everything above 1,300 USD as bullish. In fact, why not favor a push down towards 295 here? A potential long trigger, which could definitely not enrich, but make the risk reward more attractive for long engagements in gold. Even that is definitely positive. So I'm still very, very optimistic for gold. On the other hand, quite pessimistic for the US dollar, for the greenback. Nevertheless, currently we definitely need to make it back above the current weekly highs, which can be found around 1,341 USD per ounce, if I'm not mistaken. So that's definitely a level to clear and take out here. Else we are neutral with, nevertheless, at least a bullish touch in my opinion. And yeah, and so in fact that's it around the markets. If you have any questions, please shoot over an email, contact me via Twitter. I definitely look forward and would be really happy to answer your questions. And yeah, then we talk again to each other tomorrow, Thursday, the 1st of March then, 2018, 10:30 a.m. GMT. I definitely look forward to it, and I wish you all the best. Happy trading. Watch your stops. Talk to you tomorrow. Take care. See you, and bye-bye.